네, 월가 트레이더 버니의 미국 주식 시간으로 돌아왔습니다. 미국 시카고에서 재무 컨설턴트로 계신 버니 씨와 연결을 해서 시장에 대한 이야기를 들어보는 시간인데요. 관련돼서 오늘은 시장 저변에 깔려있는 심리에 대해서 자세하게 말씀해 주신다고 합니다. 오늘 준비해 주신 내용 들어보겠습니다.
So let's review current market sentiment right now. About 20 years ago, there was a study done where if a big problem came onto the front page of a major news magazine, Time, Newsweek, Business Week, that sort of thing, that was an indication that it had gotten to such a level of common experience that everybody knew about it, that once it hit the papers, once it hit the front page of a business magazine, that was probably the end of it. Okay, so let's take a look. Now we don't have as many magazines that come out. We're not dependent upon that kind of news source. So let's look at what we find in terms of individual articles. So what we found right now is that if we look at the amount of daily news articles mentioning a bear market, because we can identify these things, we can split it all different kind of ways, is that we have a fairly significant level right now, way more significant than we've had in the last 10 years, outside of the March COVID lows. But what we have is a significant amount here. All these other significant amounts were in an uptrend, and they provided great buying opportunities. So we still see this, and I think this is a relevant area, because what happens is when we get levels like this down the road, we're going to be able to say, hey, that was a bottom. Now, one of the things we also want to look at is, instead of just looking at stocks in the stock bear market, let's look at how many consumers expect stocks and bonds together to rise. And we are basically back down to the lows that we've had for the last 25, 30 years. So in 2008, 2009, we never got to a low price down there, because although people were really negative about the stock market, the bond market was the benefit of all this new liquidity that was getting provided to it, and bond prices were actually doing much better. Now we have a spot where bond and stock prices are not viewed favorably going into the future. And that's, if we can identify that with a condition where we see that the consumer, the investor, is both on the institutional and the retail side are out of the market, those are great opportunities to make a buy. We still have to find that opportunity. We haven't seen that yet in this whole move. We want to look at consumer sentiment now and say, okay, when we get down to these low levels, if they don't think the market's going to rally, I mean, if they're very pessimistic on the market, they're very pessimistic, in this case, on the economy, when we get down to these levels down here, and this goes back to 1970, what are the 12-month returns coming out of this thing? Now, it gets a little tricky, because you can have a low down here and a bounce and then a low down here, and I get to pick the low here and say, okay, we rallied 22%. But we didn't rally 22% off of that first low. But overall, periods down here, the same thing happened in 08. We went down September of 08. People were saying, oh, great buying opportunity. And what we wound up doing was going down another 30% in the market between September of 08 and March of 09. And then in March of 09, we bottomed, and that was great. But overall, these numbers right here are the one-year returns at from those lows. What we can see is up here, the one-year returns are not anywhere near as good. This was right in front of the COVID pandemic, where the Fed provided all that fresh new liquidity. So that changed everything right here. But right down here, these periods have tended to do well. Now, this current reading is 59.4. In a year, we can replace that with where the stocks are going to be from here and a 12-month return. We still have yet to go, and whether that's the low or we go lower or at double bottom, we don't know yet. In terms of IPO activity, initial public offering activity, that usually falls apart at market lows. I don't know if we've seen it quite as low as we need to see it right now. So this might need to like push down a little bit lower. We'll have to wait and see. But now, we've showed this chart before also. Leveraged ETF activity. So leveraged activity, leveraged ETFs are 2 times, 3 times the price performance, so they're levered, okay? And what we want to look at is when the market's at a peak that people are buying a lot more or trading a lot more long levered ETFs than short ETFs, and at the bottom they're trading a lot more short ETFs than long ETFs. And we're finally getting down to a period down here where we've been down and had markets respond positively. So I think that's a positive sign, is that we're starting now to experience levels down here where too many people are trading on the short side of the market. When we look at insider block sales, okay, when insiders are selling big blocks of stock, okay, at the, as the market's rallying, they can sell them, it's all great, okay, but at the market bottoms, do they sell or not sell? And what we've seen down here, we can pick up all these times where the percentage of issues traded on block sale basis are at low levels of the market. So you can then refer, okay, was that a good buy, not a good buy? This is our example of 08 to 09. Okay, this is before September of 08. That was March of 08. That was a terrible signal. But the rest of the signals have been pretty good. So it's interesting to note, and we've just gotten down here again, okay, is this going to be a turning point or not? Don't forget, I like to see all these, but I also like to see an investor base that's sold out, and we still have yet to find that. Finally, what we want to look at here, and it's a little bit delayed because we get the information a little bit delayed, but this is when people sell tremendous amounts of stocks and bonds over a 6-week window. So we have to go back to, we got to go back the last 6 weeks, so that's why these readings are a little bit delayed. But every time we've sold more than $35 billion, okay, in stocks and bond funds, outflows, net outflows, they have been at market bottoms. And this goes back for the last 9 years. So we're at a place where they've sold $35 billion again right here. More and more observations that are coincidental with market bottoms. Now, I'm still not saying we've seen a market bottom because I haven't seen indications of an investor base that's completely sold out yet. But what I am seeing is a lot of coincidental pieces of information now, finally, that are telling us that we have seen some selling, and some selling that usually is coincidental with market lows.